Welcome back to IR in Focus, the show where we dive into the latest trends, strategies, and economics shaping investor relations. I'm your host, Carmen Lilly, and in the next 20 minutes, we'll be revisiting our discussion on generative AI and the implications on corporations, and also taking a look forward to 2025 in terms of themes and what to expect. With me on this discussion is Chief Technology, Media, and Telecommunications Analyst, Eric Hanselman. Welcome, Eric.
Hi, Carmen. Thanks for inviting me.
Yeah, no problem. Thanks for being here. Now, before we dive into our discussion, let me just do a quick intro for our listeners. So, Eric Hanselman is the chief analyst at S&P Global Market Intelligence, and he coordinates industry analysis across our research portfolio. So glad to have you here this week on the podcast. As we were just chatting about, there are some big developments in the market. But before we really dive into some of that discussion, let's start with just a general overview of your recent research report that you published on AI. It was titled Generative AI from Hype to Value. Can you give us, a quick primer on what this paper is, what resources you use, and what conclusions are made?
Sure. Well, the report is really a roll-up of a whole bunch of different perspectives that we've developed in research around generative AI. Not surprisingly, generative AI is at I don't know if it's the peak of its current hype cycle, but it's getting a lot of traction, a lot of attention, and a lot of conversation. And what we pull together are both our data from the various market perspectives, whether or not those happen to be investments, all the kinds of things that are going on from both a capital markets environment, mergers and acquisition, and also quantitative perspectives from end users. So we use 451 Alliance. It's a panel that we curate of IT decision makers, and we take a look at their thoughts about where technology is going. And of course, generative AI is top of mind for everyone, not only from a technology perspective, but also from an IT infrastructure and investment perspective. It's shifting spending. It's really swaying what has been the technology landscape in ways that we haven't seen in other transitions before. If you compare this to maybe the transition from cloud utilization, for example, or maybe virtualization, even maybe the internet boom way back when, this really is shifting in some different ways with a whole set of impacts that are both affecting the technology markets and even rolling out into society at large.
Yeah, and I found this research report very timely and very informative, and there's great pieces in here that I think would be really helpful for our audience to unpack a little bit more. Where I wanted to start, so within your research, you say, many have the conviction to adopt, but are still working to identify where Gen AI can be most practically applied to drive meaningful returns. I like that a lot because when I think about just kind of in my normal life in layman terms, like the Gen AI hype is real, but a lot of it is like, oh, this is fun to play with like Chat GPT, right? What is the actual practical implication? Like how will corporations be using this technology, right? And then you go on into your paper to say there are six major areas in terms of how corporations are thinking about applications. So maybe perhaps you could highlight some of those, maybe go through the six major areas and maybe some practical applications within corporations that you've seen.
Well, you make a really good point, which is that the consumer level exposure, all of the various, ChatGPT, Perplexities, everybody's apps that just regular people can go out and use has created a huge amount of interest. And when you bring that into the corporate sphere, there's all of that excitement of, wow, I played with it, it did some cool stuff, and now shouldn't we be able to do that in our within our four walls? Uh, it starts to actually change a little bit in terms of what's practical and what's really going to deliver results. We're now over 2 years since the debut of ChatGPT, and we looked at a number of different use cases and looked at what enterprises were really seeing in terms of effectiveness. and where they saw return. Now, the good news is that enterprises are seeing returns, but there are some challenges in actually achieving them. One of the difficulties is ensuring that you've actually got use cases that you can implement with both the infrastructure you have, more importantly, with the data resources that you have, because you've got to train those generative models with data, and that's potentially a challenge to be able to get the data and extract it from where you're actually pulling from. Uh, but the use cases that we were looking at were things like generating operational efficiency, which really led the list of those areas that was seeing the greatest return. And that's an area where you've got well over half of respondents identifying there's been a positive impact. Customer satisfaction followed fairly closely behind that. There were areas, though, where there were challenges. And bottom of that list was cost management. It was interesting to see concerns about how they could manage cost, especially when you look at the capital investments that are often needed to build out infrastructure for LLMs, whether or not that happens to be fees in both cloud environments or subscription that are hopefully going to pay back for themselves. But that was an area in which we saw of the various use cases that we were pulling out actually had the most limited return. So interesting to see some of these trade-offs back and forth.
So, in your findings, could you maybe expand upon things that seem to be very popular, but maybe not necessarily, to your point, doesn't bridge the gap between the cost versus return?
Oh, sure. Well, I think the difficulty is that a lot of it's going to depend upon the implementation within the organization and their ability to actually make it work well. Because so much of that really depends upon the organization's ability to really gain traction with the application itself. So things like operational efficiency, if you implement well, if you're actually able to integrate it into the way the business operates, you've got the ability to really capitalize on it reasonably effectively. But even things like employee satisfaction, generating more revenue, being able to go build new models of either new products, new services, new capabilities. These are areas in which we're starting to see, especially in the most recent results. I guess to a certain extent, the bloom is off the rose a little bit. Organizations came into this with an expectation that generative models would be a panacea. And now with this most recent update in the data, again, it's now far enough in. Organizations have now got a little more experience working with it. Now they're starting to see some of the benefits as maybe being a little more elusive, and some of the challenges as being a little bit steeper than they'd originally believed. And we see some of that in some of the things that are, I think, the concerns that organizations are expressing. So, in the most recent data that's actually just recently released this month, which was an update to some of the data that we saw within the report, uh, the leading concern about generative applications are issues around accuracy. And that's an indication that organizations are starting to get through those early pilot developments, and they're starting to realize that this is a little more complicated than it looks. That this isn't something that you can treat it lightly and generate results no matter what the circumstances are in which you're standing this up. The other principal concern right behind it is budget, because this is expensive. This is diverting other IT budget resources. For some organizations, actually less than half, there is net new spending, but the majority of organizations are diverting spending from other IT projects, and that of course has got implications in terms of what's taking place within the organization. It may be blunting other initiatives. It may be slowing other key projects. So it's a bit of a trade-off organizations are facing as they try and gain benefits, no matter what those use cases happen to be.
Mm-hmm. Yeah, and from your paper, you quoted I'm just going to read this off real quick. A recent macroeconomic outlook, SME Tech Trends Generative AI Adoption 2024 survey had half, around 49% of respondents reporting that Gen A is falling short of expected levels of value. So just kind of reiterating what you're saying is that there is all of this attention right now on Gen AI. There is a lot of excitement around it, but it seems like the wind is kind of being taken out of corporation sales because you're like, oof, you know, this thing is new and exciting, but maybe we fall flat on implementation or actually unlocking that value that AI could bring to corporations.
Yeah, that's the deal. Is that I think originally there was this thought that it was going to be the magic pixie dust that you just sprinkle a little generative AI on things and it's going to be so much better. The problem, of course, is that it takes a lot more work to make this happen. It takes better access to data. Um, I mean, the big challenge with generative AI is that it requires a shift in thinking in the way in which organizations have dealt with applications. Historically, if you were going to stand up a new application to do a new thing within an organization, it was the application itself that was really the thing that contained all the functionality. You spend a lot of time coding it and building the application, and the data part was really just sort of what was running along with it. And often the data was the product of what you were actually working with. What's happened with generative AI is that it's raised this level of abstraction for the way in which we're dealing with applications to a point where data is really the point of value. Data is what's driving the function. Now, generative AI is the analytical engine that's going to actually put the data to work, but so much of the equation of how much value you can get out of generative AI is baked into the quality of the data that you've got up front. And we built a maturity model in terms of where organizations are in terms of their adoption of generative models and their deployment. And that kind of quality issue is something that they start to see early on in this maturity model. It really isn't until they get into significant production where a lot of the ramifications of some of the challenges actually start to come to the fore. If we look at what the principal causes are for project failure, data quality is right up there with budget limitations as the causes for projects to fail. It really winds up being this interesting trade-off of organizations come to it with an expectation that they'll be able to move forward pretty rapidly to make all this happen, and yet wind up running into significant problems as they try and actually roll it out.
Yeah, and then that's a great point that you bring up in terms of the data really being kind of the thing that underpins a successful AI project. 'Cause I think a lot of folks like, and I absolutely agree with you. I think a lot of folks, the way they were thinking about AI is that the data and the system were like one. You wouldn't parse them out, be like, oh, if I have AI, it's going to be able to do all this analysis. But they forget about, oof, like what analysis is it actually running off of? What is the underlying data? So I think that's a great point for corporations to really think about is that Gen AI is something separate from a database, and that database needs to have the accuracy standards that you're looking for.
Well, and actually, that's one of the key issues around this, which is that structured data that's in databases is relatively easy to get to. But one of the other things that's come out of the latest version of the study is really a refinement of something we started to see, which is that it's not that the data isn't available, because most organizations have got a fair amount of accumulated data. They've got a lot of databases, they've got a lot of information. Many have data lakes that they've built that are accumulating all sorts of operational data from their environments. The problem is more accessibility. How do you get the data in the right form into an environment where you can actually train a model on it? And that's the bigger issue, because so often, because data was kind of this byproduct, historically, we didn't put a lot of thought into categorizing it, labeling it, classifying it. And now, you know, AI models are great at pulling in large volumes of data. And the difficulty, though, is that if the quality of that data isn't great, if your data lake is full of a lot of old tires, shopping carts, all sorts of other things that had just been things that have been in there forever, uh, they all are very efficiently sucked up by that large language model for training purposes. You just simply feed it to the model, but then what you've built is something that's got a whole lot of characteristics that you may not want in terms of what the model is actually going to generate when you turn it loose. And that's really one of the principal problems we run into.
Right. So basically, what I'm taking away is it's not magic fairy dust, and it's actually very complicated in terms of understanding and implementing. Which it's not to say it's not powerful. It is, but it is something that's very costly and very something that you have to be really smart about implementing. Because you were also talking a little bit about having to divert spending to focus on AI, right? And I think that's just a kind of like a red flag for any investor saying, oh, okay, if you are diverting spending into AI, okay, and you are telling me AI is going to be this magical thing that increases productivity, increases your revenue, investors are going to want to see that return, right? But so that maybe cause to pause a little bit and really think about critically how best does AI integrate into my company.
Well, and you see it in major technology companies already. The markets are taking a look at capital expenditures, and because you've got all of the major technology companies spending vast amounts in various forms. Some of that winds up being in strategic investments. So if you take a look at the diversion of strategic investment dollars, uh, the what had been the very active strategic acquirers in the M&A world are now pouring such vast sums into investments in AI startups. It's actually starting to shift some of their activities in the M&A world, just simply because it's that significant a drain. If you take a look at, and you see that in up and down the street in terms of market, you look at companies like Microsoft, for example, who's seeing a dramatic expansion in capital expense. Uh, with the street, giving it a bit of a careful look and some negative reaction in terms of looking at where that spending is going, because there is that question of when's that ROI actually going to happen. If you take a look at the largest cloud companies, capital expenditures that are going on to be able to master that level of capability, uh, we're now seeing percent of revenue numbers in capex for cloud companies that are heading north of 15%, is what we project. Looking out a year or two, still hovering well over the 10 to 12% current year and year ahead. I mean, these are things that those kind of numbers are dramatic. When you start as percent of revenue were the numbers I was quoting. When you look at those sorts of numbers, those are things that open people's eyes and start to make them wonder. At the same time, it's also seeing a significant shift in venture investments. As you could guess, if you don't have AI as part of your primary story, that's really changed where venture dollars are going. So capital market impacts are significant as well.
That is a great kind of transition into, so we're talking about capex and just the cost of AI, and then what happened this week, DeepSeek pops on the scene and disrupts the market because you're looking at DeepSeek and they're saying, hey, I can do what OpenAI does for a fraction of the cost. So let's dig into that a little bit more. Your comments first on, the arrival of DeepSeek and what this means.
Well, anytime you see a shift like this, there's clearly a lot that's going on, and a little bit of background just from the DeepSeek perspective. Uh, DeepSeek, to your point, is identifying that they can build and train large language models with significantly less computational power than any of the others that are out there. And at least as of today, as we're recording, there really isn't a deep technical understanding about what those capabilities are, what they've really done, and what they actually spent. This happens to be DeepSeek's a side project of a large investment firm that the founder had built some of the technology to basically fuel some of their investment decision making, and has now branched out into a standalone environment. And there's a question about how much training was done in which environments and what got done. It's created a lot of questions about how much computational power is really needed. There and the thought is, again, DeepSeek being based in China, the expectation is that there wouldn't be access to sufficient computational resources just because of export restrictions on GPUs and other sophisticated technologies. And yet they've managed to build something that is at least relatively close to some of the large language models that are out there, like an OpenAI, like any of the big competitors there, ChatGPTs and such. The larger question is, what's that real impact? Now, with any technology shift, there are always going to be phases of heavy investment, lots of activity that are taking place, and then a phase of optimization in which, whether or not it happens to be cost, whether or not it happens to be resource constraints, whatever that limitation happens to be, there are optimizations that take place to make it work faster and better. And anytime we see this sort of transition, there are opportunities for those that are able to do it a bit better. The question with DeepSeek is, how much better are they? They also are identifying that they're open sourcing their model. Now, there are also open source models that are out there. If you look at Meta's Llama model, that is an open source model that's open and available to anyone to pick up and use. So it's this question of what that impact is, but it's had impacts really across the market, not only around AI and technology, but also around energy, because the secondary thought around this is that if you can train a large language model with less computational power, you need less energy. So all of the thoughts around data centers booming and requiring massive amounts of additional energy have also caused sell-offs in the energy side of things and a lot of the energy technologies that are around there, because there have been thoughts that nuclear is something that's going to be needed. Small modular reactors are going to be required somewhere out there to be able to meet up with all this demand. So it has hit the markets with such a breadth that I think is really the largest impact of this, is that it's caused a bit of a rethink, I think, beyond this. Even at a point at which we still don't know all of the real details. And it's always interesting in seeing market movement like this. Is this something where investors were looking for a reason to correct? Hard to say. Now, one of the things that gets kicked around a lot also is this idea from an economic perspective. The thought is that if you can do this, if you can do AI with less energy, less compute, less expense, less energy requirement, is this in fact going to pull the markets back, and so there'll be less consumption? The other thing that you've probably also been hearing this week is everybody suddenly is going back to their econ textbooks and it has come up with Jauven's paradox, the idea coined back in the Industrial Revolution that when you make consumption of a particular resource more efficient, it doesn't actually reduce the consumption, because in theory, if you're more efficient, you're going to use less of it. What happens, in fact, is that utilization increases because it's now easier to use, less expensive to use, all of those good things about it. The paradox is that because you're more efficient, you should use less of it, but in fact, we're using a lot more of it. And is the same thing going to be true for AI? That if what DeepSeek has done is actually made generative AI less expensive, are we in fact now going to use even more of it simply because it is that much easier to use? So there are a lot of unanswered questions. Clearly, significant market impact, and the larger question of what happens in the longer term when some of this, the realities start to shake out. I think the supply of semiconductor devices, GPUs and such that are necessary for building out capacity for all this, data center builds, schedules, none of this is slowing down. And granted, it's still early days. But we had already been in a position where there was significant demand prior to 2 years ago. If you think about building data centers and the whole supply chain that's required with that, these are 20-year projects, and these are things that had already been in high demand prior to the generative AI revolution that had happened. So there was already a significant uptake. Yes, generative AI boosted this dramatically, but we were already on a significant uptick prior to this, and this has only created more strain. The question is, maybe does this start to round off the peak or slow that curve a little bit? Maybe, but a lot of the projects that are underway are still moving at full steam.
Yeah, I like how you pulled in. There's a couple things that you had mentioned around how do you unpack DeepSeek and implication on the market, but you pulled in like, well, maybe, the markets were looking for a correction here. We have been talking about that maybe some of these corporations are overvalued, right? You talked a little bit about like the intersection of AI and energy and sustainability. That's something that I read about constantly, which is kind of like it, it's an interesting dynamic because we constantly talk about the energy transition, but to support the energy transition, you might have to do these really unsustainable things, right? You need a lot of clean water to keep your data centers cool. You need to mine those minerals to make those chips, right? So like AI, and to your point that it has broader impacts, and like this arrival of DeepSeek has broader knock on impacts. I think is spot on because it's such a meaty area, and it does have these intersections with all these other industries. And then everything, to your point, like everything with AI, in terms like AI arriving on the scene and people being excited and the corporations looking to like implement it, like that's not new. There's always something new that corporations like, ooh, look at this new thing that I can use to be more efficient, right? But it just seems like everything with AI seems to be on an accelerated timeline. Like we're finding out these things like super fast. Um, so with that in mind, thinking about 2025 and what's in store, could you just opine on that a little bit on, what could we expect in 2025?
Well, I think enterprises are looking to integrate a lot of the potential for AI, and we're already seeing that today. If you take a look at content creation in its various forms, it's already started to democratize the ability to do what had been relatively sophisticated things, and especially when we think about image creation, content creation more broadly, it's now become much simpler to be able to do the kind of things that, if you're in marketing, that you might have gone out to a creative agency to be able to do, to get images, to build, whatever the assets were you were looking to put together. It's now gotten to a point at which you've got tools that can do that sufficiently well. Now, there are questions about quality. There certainly are questions about how you target this. There is one of the challenges with AI is you do get a fairly generic approach to whatever the output is you're putting together. There is this discussion of in generated text, is this the AI voice? Is this a fairly neutral delivery? Does it start to impact the way in which you can connect with your customers, the employees? So there's some of those sort of back and forth and potential trade-offs, but fundamentally, there are a set of potential productivity gains that organizations are already starting to report when we look at our data. And so 2025 has the potential to be able to really look at capitalizing on some of that. And some of it is, simplifications, being able to get information more simply and easily to customers, putting a natural language front end on whatever your particular resource is, whether or not that happens to be customer information, ordering processes, all sorts of things that could potentially make that interaction simpler and easier to be able to reduce friction that way. Uh, that's that additional benefit that I think organizations are starting to see today. Things like customer support. You can ask questions and get answers more easily by bolting up a large language model front end As long as you train it, as long as you bound it and ensure that its operational safety is where you need it to be. Uh, Lots of potential there, especially when we look at retail. We're just off the National Retail Federation conference, and the show there was full of AI augmentation capabilities. What's happening is we're starting to see more and more AI functionality built into a lot of the products that we may already be working with. You see it with all of the AI assistants, Copilot in the Microsoft Office suite, things of that nature. The next stage of all of this, we're starting to see just the early stages are of what gets referred to as agentic AI, which is going from the ChatGPT model where you ask it questions or you ask it to, give you a picture of an astronaut riding a horse on the moon, and you get something back. Agentic is that shift towards it actually doing something for you. And there have now been agentic announcements from all of the major generative AI players that are out there to be able to do things like book a dinner reservation, book airline flights, take an action is that next stage of what the agentic model is. And as we roll through 2025, we'll be looking at that next stage of things. There are a lot of pieces that have to shake out in terms of being able to get to real agentic deployments. The primary one is the same kind of things we see in other highly automated environments like autonomous vehicles. Questions about liability. If an agentic AI agent books the wrong flight for me, who's going to pick up the change fees? And a lot of those questions that still need to be answered, which are fundamental to the way in which businesses actually carry themselves. But there's enough potential there and enough pieces that we'll see more of that as we start going forward. I think the other thing is we'll also see maybe a little more detail about the DeepSeek situation. My personal take is that this certainly is improvement, but I see it as more incremental and something that was going to be happening as there were more constraints placed on AI. Because especially when you look at what's happened today, a lot of AI benefits in these early stages, and for a lot of the startups that are out there, haven't had a cost associated with them. ChatGPT is free, right? Uh, but as businesses get to a point at which they've got to pay for some of that, there's going to be a little natural scaling back. There's going to be a little extra tweaking to ensure the efficiency of the models to manage some of those costs. And as those costs start to be integrated into the way businesses actually run themselves, there's going to be more careful consideration about where it gets used and how it gets managed.
So we're just about at time. So I wanted just to toss you one more question or one more opportunity to leave our listeners with a tangible piece of advice or like one takeaway from whether your research paper or anything that you've read or studied recently. Like, what is one piece of advice that you would give our listeners today?
Well, I'd say think carefully about use cases. Understand what you actually want to achieve, and so much of that is start small. Understand that there are incremental improvements that you can take, and you're not look to conquer the world initially, but take those things that you can look to simplify. Especially simple business process pieces. If you look at a lot of the improvements that organizations are starting to see now, it's simple things, even like summarization. Those kinds of things can be significantly powerful. We see that across our organization. Whether or not that happens to be internal meetings, market perspectives, what have you. Being able to do something like digest an 8K statement from an organization, being able to summarize that can be really powerful, because otherwise, how much time have we all spent reading various financial statements about organizations? Very powerful to be able to do things of that nature. The next stage is be able to then integrate that into some of the business processes. But my overall advice is start small, put some thought into it, and look at how you can make it part of a regular process. It's just the same way we're going to do anything else with new technology capabilities. put them to work in places that you can actually get real returns in, rather than doing the big pie in the sky kind of approaches first.
Thank you so much, Eric. Unfortunately, that's all the time that we have. I really appreciated our conversation today. You definitely gave us a lot to think about when it comes to the application of AI and what's next in this rapidly evolving space. So we'll be back next month with a new episode. Until then, subscribe and maybe catch up on some of the past episodes from this year on labor markets, activism, and investor engagement. And again, thank you to our special guest, Eric Hanselman, and thank you for listening and have a great day.